We're just hours away from earnings season kicking off. JP Morgan getting things started tomorrow before the bell. Bank of America, Citi, the rest report in the coming days. The setup into earnings has been strong. Even with today's slight pullback, the KBW Bank ETF is up more than 8% over the last month compared to a 2% decline for the S&P. So how are you playing the banks? Funny how we said it was strong. It's actually a tough setup, Karen. And that's why you're a little bit worried, the run-up going into earnings.
Well, right. But it was tougher last week because a lot of them peaked out last week. And, you know, JP Morgan, I think, is in maybe $5 or $6 maybe now. So I like the setup. I think that we're going to see some very good numbers. I think everyone's talking about loan growth as important. It absolutely is important because that's the kind of earnings that gets a multiple. When you have giant SPAC market or, you know, big trading, everyone looks at that as lumpy, and so they're not going to give it a real multiple, so it's not worth as much. But I think loan growth, and one thing I've been thinking about in the last few days, as all these supply chain issues happen, companies they just have to spend more money to run their business, to hold their inventory before they can't get it landed soon enough and sell it and get that cash back. So they have to have revolvers. They have to be taking out more loans. It's called working capital. So everyone's working capital is going up. That's good for the banks to the extent they're lenders there. So I think credit quality is also going to be great. The one thing I do really want to hear about is buy now, pay later, and what they're doing, how that's affecting their credit card portfolio. That's going to be of interest to me. But I think we're going to see some really good numbers.
Yeah. Guy?
Well, it's not going to manifest itself in this quarter, but the yield curve's sort of flattening out a bit. It's something to be concerned about, I guess, going forward. I mean, JP Morgan, this 170 level, which we peaked at a couple months ago, traded up to, seemingly failed now. You know, I don't know really how it sets up. We've seen over the last few quarters, probably longer, these banks tend to sell off post-earnings only to find their footing a week or so later. My sense that's going to happen again. Pete Power pitched U.S. Bancorp a few weeks ago, I think in the mid-50s. That stock, I don't know if it was an all-time high today or yesterday, but close to it. That continues to be a bank that sort of flies under everybody's radar screen.
Minnesota-based, of course. Tim, what specifically will you be looking for out of earnings season for banks?
Yeah, so I think you're going to have weaker loan. I think you're going to have at least net interest margins that are still not that sexy for the quarter, offset by strong markets-related activity. And I think there's just a sense here that a lot of these banks are positioned for a better consumer, probably unnaturally low credit concerns, too. I think that's both good and bad. I think you're going to see a few more credit reserve releases. That's good for the banks, but no one ever believes that. And on some level, people feel like we could be at kind of peak credit tolerance, and maybe things get a little bit worse. The consumer's certainly in good shape. Guys, dead on. Look, banks sell off on earnings. They've done this for the last 6 quarters. They do it more times than not. They come into this like Bank of America's looked like SoFi. It's up 45%. It's a fintech play. No, it's not. But money center banks at 1.7 times, and I'm long Bank of America, I'm long Citibank, and I stay long. But the valuations are no longer something you can say, hey, this is really attractive. So if you're a trader, I think you follow Guy on this one, and I think you pick these up in a couple of weeks. I stay long because I'm an investor.
I feel like Dan's got a snarky comment. So, Dan?
No, you keep going to me last like this, Mel. You got the surrounding the trade here. Everyone said everything that needs to be said here. You know, I'll just say this. I mean, I'll just add something here. The last 2 days, you know, yields have been kind of holding firm here. The 10-year U.S. Treasury yield at 1.58, 1.59. It got as high as 1.62. And a lot of the major money centers sold off. I thought that was pretty interesting. And I'll just leave it at that, okay?
All right. Yes, Tim.
Well, I mean, Mel, nobody puts Dan in a corner. So, I mean, I think you've got to work on that.
I just like the last word should be, you know, something that you want.
I agree.
But
there you go.
okay, fine.
Last word.
Can we make a clip? Can we make a clip of Melissa holding up Dan like in the the very last scene of Dirty Dancing? Let me see if you could put that together really quick. That would be fantastic.
That's a big lift.
Yeah.
Big lift.